Hello, everyone, and welcome back to my channel. Sorry, I've been away for a couple weeks now. I was actually in Las Vegas helping one of my best friends celebrate his bachelor party. We had to send him out right. And actually, next Saturday, I'm going to be in Punta Cana with my fiance, having the time of our life. So I try to get these videos out as much as possible to help you out. And I enjoy recording these. So it's pretty fun for me as well, tracking my Roth IRA. But today's going to be a jam-packed video because I don't know when I'm going to be able to make the next one. So I want to talk about a stock that I've been talking about, which is United Health, and also two stocks that I'm considering buying. They're very high on my watch list, and I'll talk a little bit more about that. But before we get to it, this whole point of the channel is to outperform and beat the S&P 500 by picking safe stocks. And let's take a peek. So year to date, so from January 1st till today, we're up 35%. And for the year, August on August, I can't believe we're in August already. We're up 38%. So let's take a peek at the S&P 500 because we want to outperform. For the year to date, S&P is up, let's say 10%, and for August to August, the S&P is up 15%. So we're still outperforming and beating the S&P 500. So before I kind of disappeared, I was talking about United Health. I was buying a lot of it. I hope you have been too. I was able to bring down my average to the 277. As you know, I was buying in the 300s, but I was heavily buying when it was dipping. And I got a very pleasant surprise. Guess who else was buying United Health? Not only the legend, the myth, Mr. Warren Buffett's Berkshire Hathaway. So they revealed actually a pretty big purchase. Warren Buffett has kind of been on the sidelines for a while, just holding cash, hasn't really been buying a lot of stocks. But they bought $1.6 billion worth of United Health, around 5 million shares. So this was on the 3F filing. So these big investors, you have to tell you what they're buying. Not right away. They have like a 3 months period, but that way you can see they're not manipulating the stock market. So you get to see what they were thinking. So he was buying when we were buying. So that was very awesome. But I hope you've been buying on the way down. United Health was a good deal when I first said it, and it was even a better deal when it got all the way down in the low 200s, around 230. And remember, I was talking about dollar cost averaging. I want to share a quick video from one of my favorite YouTubers and kind of talk a little bit about dollar cost averaging, and I'll show an example of what I did with United Health. Let's watch this guy real quick. So let's talk a little bit closer about DCA, especially like a company like United Health. Let me give you a good example. Let's say you have found this shirt at a local shop and you really love that shirt. You're like, oh man, this shirt is amazing, but the shirt costs $40. You're like, it's a little expensive. Maybe I'll wait. You come back the next day and that shirt is $20. What are you going to do? If you were thinking about it at $40 and you find that shirt now with 50% off, what are you going to do? You're going to buy it. You might buy another shirt for your friend, maybe for you in case the other one breaks, if you really like that shirt that much. Or maybe you buy another one for a gift. So let's take a look at United Health. United Health was almost a $600 stock. Now we got 50% off at 282. Actually, a little bit over 50%. What are you going to do? You're going to buy more. This company is a leader in this sector. This company is not broken. This company is dominating. Yes, facing some allegations, but it's far oversold. It should not be here. It should be at least $400 a share. So you see the difference here? This is where the alpha comes in. The bad news, people get scared. They start selling. Hedge funds, they're so quick to pull the trigger because they're managing billions and trillions of dollars. A 1% loss for them is massive. So they immediately sell, and the stock starts to plummet. And what do? We find this alpha. We find a company that is a leader in this sector at a 50% off. It's like finding your favorite shirt at 50% off. What are we doing? We're going to load the boat. We're going to be patient. It may go more down. The next earnings is going to be on July 29th. There's a new CEO. He may come in and say, you know what? Let's cause more pain because I want to look like a good CEO. I want to see the stock go maybe in instance to 250 because they're going to, at the end of his journey, he's going to say, hey, I brought that company from $250 to $600. And low key, they're probably buying too on the way down. As you can see with his other purchase at 25 million at 287 a share, I believe. So don't let the news fool you. Find these companies, do your research, do your homework, and see, is this a broken stock or a broken company? If it's a broken company, companies do go out of business. Just remember that. But remember what they're in, remember what they're serving, and you see the future of that company. For instance, I'm not gonna buy a type printer company. Why? Because we have computers and all that stuff. So that company, yeah, is deserving to go down. But a company like United Health, with healthcare, the largest healthcare insurer in the world, the leader of his sector, with millions and millions of people have plans with them, and employers and all this stuff. Even the government has plans with United Health. You think to yourself, in 10 years, will you be surprised if United Health goes out of business? I will be very, very surprised if United Health goes out of business. Versus a company like a typewriter business, will you be surprised if it's completely out of business in 10 years? Yeah, actually, I would have been surprised if it lasted that long. I'm like, oh, they should have been out of business as of this date. So just remember what you're holding, remember what you're buying. Find. See, I was gonna pause myself a little bit earlier, but I was preaching. I'm spitting fire. But yeah, exactly. So that's what I meant. So what we found out is Warren Buffett's been thinking exactly the same thing. This company was super discounted. We got this opportunity of a lifetime, and we kept buying. So let's take a look exactly what I've been doing. So I opened up a position on June 20th. This is my Roth IRA. My other account is much bigger, so I don't put as much money into this. So overall, I was able to put around $18,000 total between all my portfolios into United Health, because this was a steal and I was acting like it was. So I started buying at 304, 158. It went down about $103. Kept buying, kept buying. It went back up to 316 and I bought 200 shares because I still thought it was a good deal. Went down to 312, kept buying. And this is where the pain comes in. This is where it's tough as an investor. And you start thinking, man, did I get this right? Am I buying a falling knife, or something is not adding up here? So I kept looking, I kept doing more research, and I found out I'm not missing something. I'm a nurse. United Health is used everywhere. Everybody got United Health. This is a health insurance. We don't have free health insurance like Canada or any other European state. So this is what we have. This is the biggest company. So I just kept buying, kept buying. It's tough. See, now we're in the 240s. I was buying at 316. It's not good to see that. And then next thing you know, Warren Buffett starts buying. My last purchase was at 270. And it happened to be the day Warren Buffett disclosed it. So I got lucky with that one. Now United Health is sitting at 308. It's still going to go much higher. It may go down once all the hype goes down, but at least it baked in that my research, my homework, the greatest of all time, Warren Buffett, was thinking the same thing. So now let's get to my next subject. There's two stocks that I put high on my radar. They were both sitting at 52-week lows, and they're getting very, very attractive. So let's talk about the first one. The first one is UPS. UPS for the past 5 years has been pretty much dead money. So in the past 5 years, if you would have bought it right here in 2020, you would have been down 45%. All time is just not that much of a growth. So why am I looking at this company? I'm starting to think that this company is starting to hit bottom. The dividend yield on this company is very, very attractive, is at 7.5%. And I'm looking at the numbers over here. If you look at United Health, it had that spurt pretty much right here where the income was 11 billion and the revenue was 100 billion. And if you go back here to 2024, the revenue is 91 billion and the net income is 5 billion. So I don't see that big of a drop to kind of justify the company going from this much to this much. I think it should have been fair value for this company is like 105, 110. And the dividend yield is very, very attractive, like I said. And if you don't know, this is the Long Investor on X, very good account, shares very, very helpful information. And as you can see here, the revenue, it's not really collapsing like the stock has. And I talk a lot about broken companies versus broken stocks. I think with this one, it was a broken company. As you can see here in the growth, it was negative, but now it's starting to rebound a little bit. Remember, this is not going to be an AI name. This is not going to be a big growth. But with a dividend yield of 7.5, 7.6%, it might be worth it to buy it, hold it for the gains to like 105, maybe even further. You have a very stable company. I know Amazon and them are going to be splitting up, so it's kind of a little bit concerning. But with a 7.6% dividend yield, it's probably very, very worth it to have in something like in a Roth IRA, or if you're going to retire and want to live off of income. This company is not going to go anywhere. I could guarantee you that. You got FedEx, you got UPS, and you got Amazon, and we got packages for days. So this is a big business that's very hard to get into. And as you can see, the margins have been kind of flat at this point. And there's a lot of insider buying. The CEO recently bought $1 million worth of shares, and so has his directors and everything like that, around $400,000. So there's a lot of insider buying. It's kind of like with United Health. If these people that know the company best think it's going to be out of business, people only buy for one reason. People only spend money for one reason, and that reason is in the stock market is to make money. So on to the next stock. Actually, I was not even thinking about this company. I used to own it a long time ago, but I happened to do a little shopping for Punta Cana with my fiance, and I kid you not, I had to beg to leave the store. We paid around $400, which I never thought I would spend in a retailer, and that place is Target. Target right now has a very attractive dividend yield, I think around 4%. But if you look at their annual profits and numbers, they're pretty much flat. And if you see here, the drop is very dramatic. This company was in the 140s. I know people are afraid that Amazon and Walmart are going to be taking it out. But the thing I look at about Target is they have a very specific target. Their target is people with money, specifically females. And man, people that go there, I swear to God, they could stay there. There's a lot of memes where men creating like sports leagues outside of Target and everything like that. I legit had to beg to get out of Target. And I spent paying, we both split this bill, 400 and something dollars. Like, how at Target? Yeah. So I think this company is worth looking at. As you can see here, 4.34% dividend yield. Uh, with the Circle Plus rewards and everything like that, I think is a very sticky business. And the people that they target, they spend money. And there's a Starbucks at every location. So these are the two that I need to do better homework in, but they're very, very high on my watch list. And if you really think about it, we're in August. Time flies by. Holiday season is coming in where we're gonna need a lot of UPS, and people are gonna be shopping at Target. And the stores were packed, man. When I went there, people say Target is dead. It's not. These stores were packed. They had lines at the check-in room, checkout line, and everyone was just shopping. So I hope these bring you some help, and I'll see you on the next one.